Welcome to FOMO Consulting for your daily AMC stock analysis video on Saturday, July 10th. Ladies and gentlemen, our opponent, they cannot win. The only way to win is to cover. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel and I appreciate the support. Let's get into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you very much. Let's start with a quote. Oh, say now, mister, you can't read. You gotta have a shirt and tie to get a seat. You cannot watch, you cannot eat. You ain't supposed to be here. And the sign says, you gotta have a membership card to get inside. This is a lyric from the famous song Signs, recorded by multiple artists. But this is a great lyric around exactly where we are versus our opponent. They do not want us to have a seat at the table, the retail investor, the ape, the diamond hand. We do not have ties and suits in most cases. We don't belong, and we ain't supposed to be here. But ladies and gentlemen, we are here, and we will have a seat at this table. So let's look at the broader market from yesterday. Absolutely fantastic day. Nice recovery, especially after the bloodbath on Thursday. S&P closed up 48 points, Dow up 448, NASDAQ up 142, and the Russell had a fantastic day, up 48. Overall, great day. Pretty much everything green except for obviously AMC. So let's look at crypto from this morning. Overall, not terrible, obviously, mostly, if not all, red. Bitcoin, Ethereum, Litecoin, they're all down around 2 to 3, 4%, whatever. Again, just a lot of volatility in crypto these days, and certainly the ebbs and flows are just part of being a holder, right? Always fun to look at pre-timing going into next week. Certainly showing very bullish. I would agree, but we'll see how this plays out. Big news for the box office. Black Widow poised to capture pandemic era record with $87.8 million debut. Keeping in mind F9 a couple of weekends ago posted the largest pandemic era record at 70 million in its debut weekend. This will crush it, no doubt. Overall, just a lot of positive sentiment. This is not a dead cat. The movie theater experience is certainly not a dead experience. And, I've pondered a lot lately around the idea of why our opponent is so adamant about, number one, shorting this, holding on to it. So I've been looking for some information around the streaming services. Obviously, they're competing with the box office sales. Obviously, the box offices are rocking, huge numbers coming in around the pandemic, reopening, even on limited capacities. And I found this one article, every movie theater versus streaming release is riddled with pros and cons. And I found this one excerpt and it kind of summed it up for me. Should studios relinquish the high upside revenues of theatrical and go all in on streaming? The apple of Wall Street's eye. Can SVOD, replicate the financial success of a box office hit? And then as you do some additional digging, you'll find out a lot of our opponents are heavily invested. State Street being one is heavily invested in Netflix and these other streaming services such as Disney, Prime, what have you. They would love nothing more than to have 100% market share of the box office revenue through streaming service. They're heavily invested in that. They would love nothing more than to put AMC out of business, keeping in mind most of the ownership of Cinemark is institutionally owned. So in a blink of an eye, they could sell off and put Cinemark out of business quite quickly. They do not have the apes and diamond hands retail investor backing that AMC certainly does since we own the float. We completely screwed their plans, in my opinion. They got it down to $2, put AMC out of business, the largest theater operator, and all of a sudden you have a ton of new market share, right? The only place to go for new titles is where? Netflix, Disney, Amazon, what have you. So again, this is very personal for them, which is why I believe they're battling us each and every day so very heavily. This is as much around AMC as well, going out of business for them. Again, this is personal against us and retribution against earlier this year in January. And now, yet again, the apes and diamond hands and retail investors done it to them again. Groundbreaking experience tonight, UFC in 95 US theaters being streamed live. Absolutely fantastic. I believe this is going to be a bigger hit than most people believe. And again, a new revenue source for AMC, but keeping in mind their highest margin revenue stream is the concessions. So at $25 a ticket versus what, $65.70 at home on pay-per-view, buy a beer, soda, popcorn, nachos, whatever. Certainly they're benefiting not only from the ticket sale, but more importantly from the concession revenue, which is a higher margin, which again helps their business. The meme stock rally hurt Melvin and Maple Lane, and it hasn't gotten easier since. When will they learn? When will they learn? So let's get this out of the way. AMC was on the threshold security list. AMC is no longer on the threshold security list. A lot of due diligence, a lot of speculation. Likely they did just enough, whether it's covering or, options, shenanigans, whatever you want to say. But they are no longer on the list. Was there some covering of some, or not covering necessarily, but buying of and closing out those FTD positions Thursday? Likely. The bare minimum, I'm sure, but nonetheless, we'll see if it reappears early next week to kind of confirm a lot of the due diligence. We'll see what happens. Well done, German Apes. Closed at 39.42 euros, down about 3% overall. Not a bad day considering the week that we've all had. AMC, as you can see, we basically had a volatile opening as usual, then pretty much just slowly bled off. You could call it consolidation, whatever you want to call it, but we certainly did not move in line with the Russell 2000 as we have done subsequent days. Not sure why, obviously, other than the shorting and the pinning of price due to options. Fridays have traditionally not been our better day, but to close basically where we closed, down about 3.5% at 46.19, down $1.75, up a little bit after hours. Not that big of a deal to me anyway, but I believe versus the previous 3 trading days, I'll take it. It was a little calmer yesterday. Certainly boring, but at least we didn't, have the volatility we had the previous 3 days. And again, lower volume days, you can see even on the larger stocks, Apple, Sundial, that are usually much higher in volume. Overall, Fridays are typically lower. We just barely miss being in the top 10, but we are always the most popular. So as you can see, I showed this yesterday, just a brief reminder, we closed the previous Friday around the $52 mark. We traveled a long mile to get back to where we were, but really we closed down just a few dollars below the previous close. We certainly found a lot of support yesterday around that $46 range, which was reassuring to see after the big bounce and the recovery we had on Thursday. And I believe that's very important going into next week. And looking at my Fidelity account, Trading Central, as long as 41.60 is support, look for $68.90. Stop, pause, read this. It's actually good DD, very technical, but it kind of backs up what I believe in anyway. So let's look at AMC again. This is over the 15-minute chart. So what I want to show you here is that $46 level, which is absolute key. And if you look back to earlier in June, around the 9th, 10th, 11th, that time frame, when we dipped down into the upper 30s, you can see where we hit that line and we bounced. We did not bounce nearly as aggressively as we did Thursday. As you can see, we did gap down during the after hours pre-market, but as soon as pretty much the opening bell hit, we bounced quickly and got back above that 46. To me, that shows a lot more strength in the stock than we had previously and earlier in June. As you can see, when it bounced in earlier June, it did bounce, but it then kind of consolidated. Then we had that Friday with the 15% green day, but the second half of the trading day, for whatever reason, we ran up quite hard late on that Friday. If you recall, this happened intraday shortly after, hit, bounced, and recovered very hard. Then we've consolidated ever since. Again, I think the strength shows more in the in Thursday and Fridays than it did previously in June. And as you can see, the RSI got pressed down into the oversold area on both occasions. The one thing that gives me concern, and I'm not a big fill the gap kind of person, but you know, there is a gap in the chart. Who knows? They may try to get it down there at some point to try to fill that gap, as they say. Not putting a lot of emphasis in that, but we are at a critical point in this stock's behavior. You know, Monday, Tuesday, we do need, in my opinion, a strong green day to kind of get back on the uptrend to verify it is a trend reversal to the upside. If we break down below that $40 level again, we will likely fall, in my opinion, to the 30s, possibly even $30. So let's look at it again from the 1 hour perspective. You see the same scenario. We bounced in early June, but it was a more gradual bounce, kind of consolidation, and then that run up on that Friday. Obviously, more recently, we bounced, and we recovered very hard, which again shows me a lot more strength. And as you can see, both the RSIs got pressed down into oversold territory leading up to that event. And certainly there's the gap. Let's look at the 4 hour. Again, we hit that $40 level, upper 30s, and we bounced quite hard. But you can see even on the 4 hour, the difference in the candles, it was much more gradual. And earlier in June to this past Thursday was much more violent, much more convincing of an uptick. The only thing, again, that gives me pause in this chart is the last three candles on this chart that are, you know, red and kind of trickling down. Again, Monday and Tuesday are going to be absolutely essential to make sure that we rebound and it is a true trend reversal. If we continue to bleed down even on a Monday, which is historically very green for us, we may have to have a different kind of discussion. But as you can see, the RSI has pretty much since the big run up, they have worked and worked and worked to press us down. Now, again, our hard bounce that we had Thursday was on much lower volume than we had recently, or you know, over the last month or so, which I think is very promising. But as you can see, the MACD again has been on a bearish downturn the entire time. It has not been overly heavy, but it's been enough just to press it down, shorting, and we all know we've been facing. It's not been a real deep MACD, which means it can reverse pretty quickly, but overall you can see the trend has been down ever since we had the big run up. And again, volume is absolutely key. That red trend line I just drew pretty much shows we need to start hitting that line, in my opinion, to really show bullish conviction. If we remain on lower volumes, we're going to be very susceptible to being pressed down. We have a lot of support, but it's much harder to hold that support without higher levels of volume, especially bullish volume. And again, you see that uptrend. I believe we need to continue that uptrend. It needs to be very similar next week as we were previously in June. And again, one more look at the daily. You can clearly see it's somewhat of a double bottom. We need to kind of finish this off again. I believe we need another pretty juicy green candle to really get us going back in the right direction. If we break 50, 51, 52, kind of a light resistance. I believe we'll be back at 60 in no time. I believe there's a lot of day traders, technical traders that are watching for us to break the $50 level, and once they do, the money will start flowing back in. Again, MACD, as you can see, has been on a bearish trend for a few weeks now. It looks like it's kind of bottoming out, ready for a trend reversal. We shall see, but green candles will make that happen. And the RSI is running about neutral with a lot of room to run. Again, a lot of concentration on the pennant over the last couple of weeks. We did break out of it. It may very well be a fake out breakdown. We may blast back through that to the upside. We shall see. We tried to get back in it Thursday and Friday. We shall see what Monday holds. Again, Alligator's mouth is closed now. Sadly enough, he's just resting. It is not bearish yet. He is just taking a break. But overall, again, MACD and RSI are both have been in a bearish direction, and the RSI is certainly in the neutral range, ready to run. So GME may be exactly what AMC needs. As you can see, a 4-hour chart going back a couple of months or whatever, you can see where GME at the same time as AMC's run up in early June, GME also ran with it. We need the big brother to wake up and get going. And this may very well be the catalyst that we both need. I believe it's coming up on the 14th, the GameStop NFT. I know there's a lot of due diligence speculation around this may rid us of the short interest, burn the shorts, what have you, but this may very well be just the catalyst we all need to get everybody going. We shall see. As you can see, GME had a great day Friday, I believe. Nice recovery day, found some consolidation second half of the trading day. But overall, did pretty well considering, again, Fridays have not been the best days for the quote-unquote meme stocks. And IWM, the ETF AMC is most associated with, heaviest, about 9 million shares. We have trended with IWM substantially over the last week or so. Yesterday, we broke from that tradition, just like the Russell, so you could tell they were certainly shorting it, lower volume, pinning it. Again, not moving along with the broader market, not moving along with the ETF, certainly would kind of point to manipulation, right? We are currently at 37 days of the short position average age, and the short interest continues to climb. We are now at 19%. If this keeps up, we could be in the 20% range by the end of the week. Overall, again, volumes were very, very low, about a third of what we were just on Thursday alone, close to 100 million shares on loan. Obviously, utilization around 90%. That's kind of trickling up and increasing. Days to covers going up just a bit. They borrowed around 2 million shares, returned 1.37. Overall, nothing's new, nothing's changed. Not a lot to fight for on the call side yesterday. A lot of open interest on the options. Again, one thing that did give me a lot of confidence was the whales, retail investors, whoever. We really fought to keep that price above 46. You can tell in the last 10 minutes they were trying to get it down below 46 to put additional puts in the money. We did not allow it, which showed me a lot of strength and a lot of willpower. Again, we need the whales as well as the eights and diamond hands, right? Looking at the chain for next week, you can certainly see where the open interest is, and deep in the money, or excuse me, deep out of the money, calls at the $145 strike is certainly accumulating. $100 is certainly accumulating, expiring next Friday. We shall see. Maybe the smart money knows more than we do. So looking at some of the big trades yesterday in the volume, overall volume about 750,000. Certainly very bullish at 1.6 to 1, but about close to half what we had on Thursday alone. I'll be interested to see If the volumes really pick up on Monday, Tuesday, I think it may, but we shall see again. Always fun to look at. Nothing fundamentally has changed, but definitely showing a probability above. Again, fun to look at. Big grain of salt. Let's close with a quote. Money can't buy you happiness, but it does bring you a more pleasant form of misery. By Spike Milligan. Wise words, I say. So I want to thank you all for watching. If you found the video informative and entertaining, please like, share, certainly comment, most importantly, subscribe. I would appreciate your support. But as always, I hope your life is full of green candles. Have a great weekend. I'll talk to you soon.